Here is something most people never stop to think about. The money in your bank account is not actually sitting in your bank. The moment you deposit a paycheck, the bank does not tuck your cash into a drawer with your name on it and wait for you to come back. It lends almost all of it out to other people. That same day, your money is funding someone's mortgage, someone's car, someone's business while you are at work. And the bank makes a fortune doing it, paying you almost nothing in return. I spent more than 20 years inside banks, and I am going to show you exactly what happens to your money the second it lands in your account, how the bank turns it into profit, and why understanding this one thing changes how you'll see your own money forever. None of it is a scandal, and all of it is perfectly legal, but once you see how the machine actually works, you stop being just a part of it and start using it. A quick note before we begin. I spent more than 20 years in banking, including about 10 years as a branch manager and district manager, so I have watched this machine work from the inside. But I am not your banker, your attorney, or your financial advisor, and nothing in this video is personal financial advice. This is education, plain and simple, about how the system works. Banking details and rates change and vary, so check the current numbers for your own situation. Any stories come from real experience, with the details changed and the people never named. I use a few tools to help make these videos, but the experience is my own. With that said, let us open it up. Let us start by killing the picture in your head. When most people imagine a bank, they picture a giant vault, stacked with everyone's cash, sitting safely until you need it. That picture is almost completely wrong. Only a tiny fraction of the money in the banking system exists as physical cash at all. The rest is just numbers on a screen. When you deposit $1,000, the bank does not store a $1,000 stack for you. It records that it owes you $1,000, and then it puts that money to work immediately. Your deposit, the second it arrives, becomes the raw material the bank uses to make money. You are not really a saver to the bank, you are a supplier. So, what does the bank do with it? It lends it out at a much higher rate than it pays you. This is the heart of the whole business, and it is beautifully simple. The bank pays you almost nothing on your savings, often around 1/3 of 1%. Then, it takes that same money and lends it to someone buying a house at around 6 or 7%, or someone using a credit card at over 20%. The gap between what they pay you and what they charge the borrower is called the spread, and that spread is the bank's profit. Every dollar you deposit becomes a tool the bank rents out for far more than it pays you to borrow it. Multiply that across millions of customers, and you understand how banks became some of the largest companies on earth. Now, here is where it gets surprising, even for people who think they understand banking. You may have learned that banks are required to keep a chunk of your money on hand. Often the figure people remember is 10%. That used to be roughly true. It is not anymore. Back in 2020, that requirement was lowered all the way to 0. Today, in 2026, banks are not legally required to hold back any fixed share of your deposits at all. What actually limits how much they lend is their own capital and their own judgment about risk, not a rule forcing them to keep your cash nearby. So the old idea that your bank is holding most of your money in reserve just in case is simply not how it works today. And here is the part that genuinely surprises most people. When a bank makes a loan, it does not reach into a vault and hand over someone else's cash. It simply types a new number into the borrower's account. That loan creates a brand new deposit that did not exist a moment before. In other words, banks do not just move money around. In the act of lending, they effectively create it. Most of the money in the entire economy today was born exactly this way, as a loan typed into existence by a bank. I know that sounds almost unbelievable, but it is how modern banking actually works, and it is why the whole system runs on confidence. The money is real because we all agree it is, and because the bank's promise to pay is backed up. At this point, you might be thinking, wait, if my money is lent out and half of it is just numbers on a screen, is it even safe? And the answer is yes, genuinely yes. Here is why. Your money is protected by federal deposit insurance, which covers up to $250,000 per person per bank. If your bank ever failed, that insurance makes you whole fast. On top of that, the central bank stands behind the whole system as a backstop. So while it is true your actual cash is out working in the world, your right to get your money back is one of the most ironclad guarantees in finance. The system is designed so that even though the money moves, your claim on it never disappears. Let me make this real with someone I helped. A woman sat down at my desk, a little upset because she had just realized the bank was paying her almost nothing on a large savings balance she had kept loyal for years. She felt, in her words, used. So I showed her exactly what we have been talking about, how the bank was taking her deposit, lending it out at many times the rate it paid her, and keeping the difference. But then I showed her the other side. She did not have to just accept it. She could move her savings to an account that paid her a fair share, and she could borrow when she needed to on the smartest terms instead of the bank's favorite ones. She walked out that day not angry, but informed, and informed is powerful. So why does the bank pay you so little for something so valuable? Honestly, because it can. For most of banking history, people did not know they had options, and big banks counted on your loyalty and your inertia. Moving your money felt like a hassle, so most people never did, and the bank kept the spread as wide as possible. But that quiet arrangement only works if you do not know the game. The bank needs your deposits to run its whole business. That means you have more power than you think. You are not begging the bank for a favor when you ask for a better rate or a fee waived. You are a supplier negotiating with a customer who needs what you have. So let us turn all of this into power for you. Once you understand that your deposit is fuel for the bank's profit, 3 moves become obvious. 1, never let your savings sit at almost no interest because you are quite literally handing the bank free profit. Move it to an account that pays you a real rate. 2, remember that the bank needs you, so do not be shy about asking for better, a waived fee, a higher rate, a lower loan cost. 3, when you borrow, shop the spread from your side, the same way the bank works it from theirs. You do not need to opt out of the system. You just need to stop being the part of it that loses. The same machine that quietly profits off most people can quietly work for the ones who understand it. And if all of this feels like a lot, let me leave you with the simple version. Your bank is a business, and your money is its most important product. There is nothing wrong with that, but it means the relationship is a two-way street, not a favor the bank is doing you. The people who come out ahead are not smarter or richer than you. They simply understand what their money is actually doing, and they make it work for them on purpose. You now understand more about how your bank really works than most people ever will. If this opened your eyes, share it with someone who has money sitting in a bank, which is just about everyone, and subscribe, because there is a lot more where this came from. So remember this, the next time you make a deposit, picture what really happens. Your money does not go to sleep in a vault. It goes straight to work, earning the bank far more than it pays you. That is not a scandal. It is just the machine, finally explained. And now that you can see it clearly, you get to decide whether your money keeps working only for the bank or starts working for you too. Knowing how the system runs is the first step to making it run in your favor. You have taken that step today. I will see you in the next video.